Welcome to the Deep Dive. So glad you're with us today. We're pulling back the curtain on one of the most talked about companies out there,
Yep.
Tesla.
Right.
We've gathered quite a stack of sources, recent articles, market analyses, and some detailed reports. And we're ready to, really dig in and extract the important stuff.
That was right.
Okay, let's unpack this. Today, it's all about Tesla, a company that's always pushing boundaries, always innovating, and, let's be honest, often stirring things up a bit.
Definitely.
Our sources, they really paint a vivid picture. It looks like a company at a crossroads, dealing with a major growth, yes, but also some pretty significant challenges. And some really interesting strategic shifts, too, things that could, well, change what Tesla is.
And what's really compelling, I think, is this sort of dual narrative playing out. You've got
Yeah.
the pressures, right? Intense competition, global market changes impacting their traditional business.
Yeah.
But then on the other side, you see these bold strategic moves, these surprising strengths popping up in other areas. It suggests maybe a very different future.
So our mission, for you listening, is to connect those dots, cut through the noise a bit.
Exactly. Help you understand what's truly significant and what Tesla's doing lately. It's complex, it's dynamic, and we want to give you some clarity on all these moving parts.
Precisely. And, well, often when you start talking Tesla, you end up talking about its CEO, don't you?
Oh, most inevitably.
Our sources are highlighting this delicate dance between Elon Musk's public persona and the company's actual performance. We're seeing reports, for instance, that the board chair, Robin Denholm, has come out and said that Musk's political activity, all the headlines it generates, hasn't actually had a measurable impact on vehicle sales.
Right, that's the official line.
And this comes as some investors are getting, a bit nervous that his public statements, the controversies, hurt the brand.
Yeah.
So the board is basically saying, look, performance matters more than perception.
Yeah.
But for you, listening, you have to wonder, does that carry risks if performance does dip? What's the tension here underneath that reassurance?
That's a really crucial point. Because that statement from the board, it isn't just like a factual observation. It's a very public vote of confidence.
Right.
They're signaling to investors, don't worry about the noise, the core business is strong. But yeah, it does raise big questions about corporate governance, about that balance between a CEO's public image and the bottom line. The risk, like you said, is it sets a really high bar. Performance has to keep outweighing any potential brand damage from, well, whatever he says or does.
Yeah, if sales suddenly drop during some controversy.
Exactly. That public stance would suddenly look pretty fragile. It's clearly a strategy to calm investor nerves,
Yeah.
but it puts immense pressure on them to keep delivering constantly.
And delivering, especially globally, means battling all sorts of external things.
Right.
Which brings us to this next point, something that really underscores the complexity of global supply chains. We're seeing these proposals out of Mexico. They're considering a pretty hefty 50% tariff on imported vehicles from countries they don't have free trade agreements with.
50% is huge.
Massive, right? And this hits Tesla directly. Sources point out a lot of the cars they sell in Mexico are actually made over in Shanghai.
Yep.
So a 50% tariff.
Yeah.
Wow. How does something like that ripple outwards? And why would Mexico even be thinking about this?
Well, if you zoom out a bit, connect it to the bigger geopolitical scene, this really highlights how crucial localized manufacturing is becoming.
Right.
And just how complex international trade policy is for any company with a global footprint. Mexico's reasons could be several things, maybe trying to attract more direct investment into their own manufacturing,
Right.
maybe protecting their own industries, or maybe it's just a bargaining chip in wider trade talks. Who knows for sure? But for Tesla, and honestly, for most EV makers relying on global manufacturing hubs outside Mexico,
Yeah.
it's not just a cost hike. It forces a fundamental rethink. Where do we build? How vulnerable are our supply lines to these steady policy shifts?
So they might have to build more regionally.
Could push them that way, yeah. Maybe accelerate that whole nearshoring trend we've been hearing about. Build closer to the final market to avoid these kinds of shocks.
So, okay, pressure from the top, potentially pressure from trade. And it's not just international. Closer to home, here in the U.S., we're seeing a real shift. Tesla's dominance, it looks a bit less, dominant.
The numbers are showing that.
Their share of U.S. EV sales dropped to 38% in August. That's the lowest it's been since, 2017?
That's a long time in the EV world.
Exactly. For years, Tesla was the EV market, basically. The name was synonymous with electric cars.
Right.
So is this just, the market growing up, natural evolution, or does this dip signal something more fundamental? a challenge to Tesla's whole brand identity, forcing them to compete on price and features like everyone else.
That's the million-dollar question, isn't it? And I think it's probably a bit of both.
There.
What's fascinating is just how fast these market dynamics can change. We're definitely moving past that early adopter phase where Tesla had that huge first-mover advantage, very little real competition.
Into a time of much broader consumer choice. And it's not just more choices, it's different choices.
Yeah.
The reasons for the dip are varied, right? Competition's heating up massively.
Lots of new EVs.
Exactly. Rivals are offering stronger incentives. And Tesla itself hasn't launched a new mass market model recently. That matters.
True.
Plus, there's worry about what happens after the federal EV tax credit expires end of September. That's been a big driver for sales.
Good point.
So, yes, it's partly natural market maturity,
Right.
but it also means Tesla's brand, once all about cutting-edge cool, that unique identity now has to fight it out in a landscape where variety, price, incentives from competitors, those are critical factors for buyers.
So more like a traditional car company fight.
It pushes them much more into that traditional auto industry competition, yeah.
Okay, so clearly some bumps in the road for the car side of things. But what's just as interesting, maybe even more telling for the future, are the big strategic moves they're making elsewhere. Where's the excitement happening?
Yeah, despite those headwinds, they're not standing still. One area getting a lot of buzz is energy storage. Tesla just unveiled something called the Mega Block and updates to their Mega Pack line, Mega Pack 3.
That's right. Big news in the energy space.
And they're making some pretty bold claims like up to 40% lower construction costs, faster installations. That sounds like a really big deal for them, especially with those auto market pressures we talked about. What's the aha moment here? What's the deep takeaway on this diversification?
The deep takeaway, I think, is that this is absolutely not just some side project. This looks like a core strategic pillar for Tesla's future. Maybe even, a reimagining of what the company is.
A full-on energy company, not just cars.
Potentially.
Yeah.
Energy storage is clearly becoming a much more important revenue stream. It helps buffer them against those ups and downs in auto deliveries.
Right.
And these innovations like the Mega Block, it's about highly modular, pre-assembled units that drastically cut down the time and complexity of building these big battery farms on site. That signals a serious commitment to scaling up this business. It positions Tesla not just as a car maker, but as a key player in sustainable energy infrastructure. A full-stack energy provider, almost. It's diversification, yes, but it's also about resilience and staying relevant in this massive global energy transition.
Interesting. And, okay, despite the challenges we outlined, the stock market seems to be feeling a bit more positive lately. Sources say the stock's bounced back, up maybe 19% this month, moving towards break-even for 2025, whatever that means exactly.
Yeah, the stock's seen some recovery.
What's driving that optimism, do you think? Beyond just the numbers on a chart, and how do we sort of square that with the challenges? Are there mixed signals?
It's definitely a mix. It's partly macro factors, partly looking ahead to future tech. So things like expectations that interest rates might come down, the general economic picture improving a bit that makes investors more willing to bet on growth stocks like Tesla.
Okay, broader market lift.
Yeah. And then there's real optimism still around Tesla's potential in AI and robotics. Those promise huge future revenue streams way beyond just selling cars.
The robotaxi dream.
Right. And some technical analysts, the ones who really focus on chart patterns, trading volumes, they see breakouts, potential for the stock to go higher, maybe $380, $400 if the momentum keeps up.
But
Other analysts, maybe those looking more at the fundamentals, the broader sentiment, they're a bit more cautious. They suggest some of these recent gains might be more driven by that general market optimism, maybe some hype, rather than purely based on Tesla's current business performance.
so sentiment versus fundamentals.
Kind of. It means you really need to watch closely if they actually deliver on those big AI and robotics promises. Execution is key.
Speaking of execution and big promises, let's talk about that huge piece of news. Elon Musk's new pay package.
Yes, the big one.
Tesla's put forward this massive new performance award for him. For 2025, it vests over years, tied to incredibly high targets, operational goals, valuation milestones involving AI, robotaxis, all those key future bets.
Extremely ambitious targets.
It's huge. So the board says it's a sign of confidence. But does tying so much to such high risk future goals carry its own risks? Does it hint at any tensions investors should maybe be aware of?
Oh, absolutely. It's viewed both ways, right? It's definitely a strong signal of the board's confidence, betting big on Musk's vision for things like AI and robotaxis. His pay is directly linked to hitting these moonshot goals that could totally reshape the company.
Hmm.
But the risks are massive if they don't meet those targets. That could really shake investor confidence, hit the stock, maybe even destabilize things.
So investors are watching very closely.
You bet they are. The financial incentives are now just monumental. Musk's personal wealth is directly tied to pulling off the company's most audacious plans. It's a classic high-risk, high-reward situation, a double-edged sword, really. The market's going to scrutinize every single step.
Okay, so we've kind of dissected the challenges, the strategic shifts, looked at the pieces. Let's try and zoom out now.
Mm.
What are the analysts, the markets generally saying about Tesla's overall direction? What's the general feeling and where are the main disagreements?
It's definitely a nuanced picture overall. On one side, you've got pretty strong agreement from many analysts who are really bullish on that energy storage piece.
The mega block effect.
Exactly. They genuinely see it as something that can offset some of the weaknesses in auto sales. It's seen as a critical alternative growth path, validating that broader energy vision.
Okay, bullish on energy.
But flip side, there's quite a bit of concern about regulatory credit revenue. That money Tesla made selling credits to other automakers who weren't meeting emission standards.
Yeah, that was a big profit driver for a while.
It was. But analysts widely expect that revenue stream to shrink significantly. Regulations are changing, other automakers are catching up with their own EVs.
So that profit booster goes away.
Largely, yeah. Which means Tesla needs to make more profit from actually selling cars and energy products. More pressure on the core business profitability.
Got it. And the pay package.
Still a point of contention, absolutely. Signal of confidence from the board, sure, but the sheer ambition of the targets means investors are laser-focused on execution. Failure isn't really an option there, financially speaking, for Musk.
Right.
And finally, circling back to the stock watchers, those technical analysts, some remain cautious. Their worry is that a chunk of the recent stock gains might be more about that broader market mood rate cut hopes, stimulus talk, rather than solid fundamental improvements in Tesla's core business right now.
So optimism about the future, tech and energy,
Yeah.
but caution about near-term car sales and maybe some market froth.
That sums it up pretty well. A mixed bag. Significant hope pinned on diversification and future tech, tempered by some real prudence about traditional revenue streams and current market sentiment.
Okay, so putting it all together, we see a company facing undeniable hurdles in its main business, more competition, market share slipping, potential trade issues,
Mm-hmm.
but at the same time making these huge, potentially game-changing bets elsewhere, energy storage, AI, robotics. What's the single most important takeaway, do you think, for someone trying to get a handle on where Tesla is heading right now?
I think it really forces an important question for you, the listener. Are we watching a fundamental strategic pivot? Is Tesla's future actually less about just selling cars and more about becoming this broader, integrated ecosystem built on AI, robotics, and energy?
A transformation.
Possibly. The picture is definitely nuanced. You really have to look beyond the daily headlines. It feels like a company not just adapting, but actively trying to redefine its whole identity, its main growth engines for the future.
And the next few years will tell if that transformation sticks.
Exactly. That's what we'll be watching.
What an incredible deep dive.
Mhm.
Tesla at a truly pivotal moment, it seems. We've covered the competition, the market share dip in cars, those tariff clouds gathering, but also the huge potential in energy storage, the bold bets on AI and robotaxis and how the market is trying to make sense of it all, sometimes optimistic, sometimes wary.
Yeah, zooming out, it really looks like Tesla is navigating this incredibly complex environment. It's where market forces, their own innovation, and global policy all collide. How they manage that interplay will really define their path forward.
So final thought for you to consider. What do you think will ultimately shape Tesla's next chapter? Will it be continued innovation and that aggressive push into new areas like energy and AI? Or will the fight in the core EV market, the intensifying competition, prove to be the biggest test they face?
A lot to think about.
Definitely. Thank you so much for joining us on this deep dive. Keep exploring, keep questioning, and we'll see you next time.